What's going on? Money Morning Live and all the new faces I see right here from the Energy Summit. Hope you guys enjoyed your time with Mark and Garrett. But right now I'm bringing in Tom Gentile, and he has a special trade for all of you that he's going to be sharing with you guys today. Something you're not going to want to miss. So if you're new around here, come check out our new face, because I'm bringing in Tom in 5, 4, 3, 2.
Hey guys and gals, Tom Gentile here. Welcome to Power Profit Trades. This is our Wednesday edition. In the next hour, I want to go over what I feel is best in the market after this big rally we had on Tuesday. Got a big trade for you as well. It's going to be very cheap. All right, I got a cheap trade on a tech stock going into earnings. And here's the best part. You don't even have to bet on direction. So imagine all of that wrapped up into a trade. I'm going to have that to you before I am done in the next hour. Also, we'll talk about today's biggest movers. Also, what we're pricing in for the rest of this week's upcoming earnings reports, how we play these, and of course, I'm going to be taking your charts right from the chat. So we got a lot to get through in less than an hour. I want to welcome everybody, all of you that are brand new. Hey, you want my take on energy? Here's my take. We have something else going on in the energy markets that you didn't even hear about last hour, and that is a bullish trend, a bullish seasonal trend that started this week. So on top of everything else that Garrett and friends talked about, there's one more reason to get hot on energy, and that is that we've got a multi-month seasonal opportunity is happening. It literally started this week. So let's get started with our market update. And I want to push on over to my chart here of the S&P 500. This thing looks like a rinse and repeat of yesterday. I'm not going to spend too much time on this because I got a lot of stocks that I want to talk about here. But let's get through the charts first. First, S&P 500, you can see here that it really did have a bit of an inside day. I mean, you know, if you look at yesterday, we did pop, all right? We did close on the high side on that rally, but not much going on today. I mean, you know, we saw some news that came out, and it really hasn't been much of an effect at all when you look at where we are right now. Now, of course, that might all change here in the next the afternoon, but this is where we sit right now. Volatility is creeping up a little bit. We'll get to the VIX here in just a moment. Come on over to the bond market, and you can see here in bonds, we do have a higher day than yesterday, but we're really getting some weight on bonds. What was going on today that's causing the bond market to still kind of drop in, meaning interest rates are likely to go higher? All right, well, we had some really hot PPI data that came through. So that is a threat of higher rates and hikes coming. You know, the other thing I saw today too was home sales, all right? So we had the home report come out, and home sales were down a bit. And while you might think that would ease back potential interest rate hikes, the reason they're down is because contractors can't get product. They're waiting months for kitchen cabinets, appliances, toilets, things to outfit the inside of the house. Now the supply chain is not on the lumber. It's not on the outside of the house. It's not the exterior. It's the interior that's getting hit. And they're saying they're waiting months for this stuff. So what does that mean? That means if we can't finish the home and get a CO on it, a certificate of occupancy, then that means that home's not ready to deliver to market, which means all existing homes are still going up in value. Right? That's not going to help things at all. That's also why we're seeing the bond market not getting a big lift either. USO, hey, energy markets on the rise once again. We're back up to above 65, 78 as of right now. And hey, you want to see the big surprise, guys? Gold. Gold's back. All right, we had a drop yesterday in GLD. And that was because, remember what we talked about yesterday? We talked about the fact that that Putin is saying he's going to pull some tanks back after the exercise is over, right? And President Biden and NATO are saying, well, wait a second. You're saying this, but we're not seeing any tank movement. We're not seeing any reduction in forces. In fact, all they're seeing is further increases. And of course, we haven't heard anything yet out of Putin. I think it's it's anybody's guess as to what's going on. The only way you can really see what's going on over there is if we had satellite imagery of movement. Other than that, it's really confusion. And confusion is good for gold and for GLD. As you can see, GLD gapped up and is trading higher off the open this morning. Now, I've said it before. I'll say it again. I'm a big owner of GLD. GLD is probably the biggest asset in my long-term portfolio right now, and I use it again as a hedge against things like the unsettlement overseas. It's also a hedge against Bitcoin, all right, which I also own, and cryptocurrency. And to me, it's just a hedge against confusion. Now, we saw the breakout. If you take a look at what's going on here, we had gold in a tight range. We broke to the upside. We broke to the downside. I think this area back at the end of January faked out a lot of people. And then from there, we've just had this massive run up. Where does GLD go from here? We got to close above 175, and we need to be above 175 for 3 days. If we can be above 175 for 3 days, then I believe we're going to start to make a run for the all-time high in the price of gold, which I believe is long, long overdue. All right. So that is GLD. I'm going to end the overall session here and get into individual stocks and some news with the VIX. So VXX, which we keep looking at as something that is moving higher. Wait, it's going lower. Wait, it's going higher. And that's kind of what we've been seeing. And today has got to be one of the quietest days we've seen on record for the year, where it is a little bit higher today, but still awaiting the next potential drama. Hey, Eric, anything
up,
you see happening in the news?
I'm not that much a news guy. I usually rely on you, Tom, for the news. But I did hear there was some stuff going on in Canada. We were kind of talking about that before. Is that something that you're looking to bring up right now?
Yeah, I mean, that's just another part of the confusion that's happening. I think it's interesting that the truckers that are in Ottawa right now, we've had we've seen this standoff now between the truckers who want freedom from vaccine mandates and the government who just want them to get out of the way. I could go into a lot of different areas, and I'm not going to because we just don't have the time. But what is very interesting is Canada, of all places, has sparked these protests now that are happening all over the world, and most notably New Zealand, of all places. I mean, New Zealand is the least confrontational people on the planet. And yet, if you look at the capital of Wellington and you look at where the parliament is, and you see all these protesters out now that are, so what did Parliament do? They have been, it's like they turn the loudspeakers on, and they've been pushing that Baby Shark song at them just over and over and over again, and songs of love and peace. This is how they're dealing with the protesters in New Zealand. I think it's funny, but
that's brutal having to hear that song over and over again.
I know. It's but if you look at this is just kind of a really a sore, like a little thumb prick, if you will. But it's something that could continue to gain momentum. We'll wait and see if it has anything to do with the stock market. But something on the back burner that I want all of you there to keep an eye on. Big thing that we got going on is that we've seen things like the overall averages, the Dow, the S&P, the QQQ. They worked off their oversold condition. A lot of these guys, and let me come back and look at the SPY. And I want you to take a look at the SPY for a moment. See this now. In this case, here's a thin blue line. It's hard to see, but this is the 200-day moving average, and we're slicing back and forth between it on the SPY. Now, let's take a look at the Dow Jones Industrial Average, or the diamonds. This is the DIA ETF. Same thing. Slice below, slice above, slice below, and we're now using that as an area of resistance. Now, one more time. QQQ. What's the tech-heavy NASDAQ have to say about it? Well, it's sliced below, and it's been using it as a bumper for the last couple of runs up, and we're nowhere near it right now. I mean, with the Qs trading at 352, we're really looking at about 366 before it hits the 200-day moving average. That's a good area of resistance that not a lot of people are looking at right now. All right, so that's what we see going forward with the overall market. So we'll be on guard for more volatility in the short term, but it's also creating some really good trading opportunities. And we've been talking about this in January. We've been talking about this in February. And I've been serving up to all of you here the exact recipe that you need to kind of not only protect yourself during this volatile season, but even prosper from it. And so we got a big day of earnings reports ahead of us. I want to get into not only the earnings reports that are coming up, but the reactions from the ones we've had here more recently. So, Eric, let's go ahead and start and move forward and get into that before we start taking any charts. You know, a little bit later on in the program, we'll be taking charts by request. So be sure to get your charts in. Here we go. Let's get started with Airbnb. All right. Airbnb, this is interesting. Airbnb has, I saw these guys on Bloomberg, the CEO of Airbnb on Bloomberg last night. It's funny. You got to wonder, does this guy even have a life? The answer is yes, I do. But sometimes it involves just hanging out and seeing what's going on while I'm having dinner. Watching Airbnb on Bloomberg, the CEO, and he's talking about how great everything is and how more and more people are just getting out, that he sees a lot of his clients. Some of them are in the endemic. They're basically going out and going on vacation regardless. But he also said what's happening is he's seeing people within their own countries. So let's say US. So if you live on the East Coast and you decide to go rent an Airbnb on the West Coast just to get out and try another side of the country. He said it's not just a few days or a week, but he's seeing people moving into these Airbnbs for a season or even longer as they're starting to live this nomadic lifestyle. That's a lot of what's happening with Airbnb, and they're kind of rebranding to that. Is why stay for a weekend, or why stay for a week? Stay for an entire season. Stay for an entire year. And that branding is paying off. You can see Airbnb had positive earnings. Stock's gone up, and it's pushing higher through earnings, as we can see here. All right, let's take a look at our next one. And our next one is Analog Devices, ADI. So ADI is on tap to have earnings come out today. All right, we haven't gotten the move yet. But what's interesting, Eric, is what I'm seeing is, and this will happen with a few stocks. We've been noticing a lot of option traders selling out. They're sellouts. And what I mean by option traders being sellouts is they're selling option premium ahead of the move, even maybe a couple of days ahead of the earnings move. And that's what's happened here with ADI. We saw that option trading volatility go from about 47 down to into the high 30s ahead of the earnings report. Do these guys know something? Well, obviously, we'll find that out after the close of business today. All right, Roblox. Roblox had its earnings come out yesterday, and as you can see, they had a less than stellar move. You can see here, this is where they closed the day up. They closed the day around somewhere in the low 70s. They're now trading in the mid 50s. That's a heck of a drop that you see there. I find it very interesting, Eric, that this one had very relatively little movement since the open. I mean, we opened in this area right here. They traded it up for a few minutes, and then they pushed it right back down. It's literally sitting near its lows of the day. Now, where does that? How does that look compared to earlier this year? Well, last month we were also sitting around the $55 area. Okay, is it a buy from here? Is it a sell from here? I don't know, and I got zero rules that are telling me to buy it or sell it today. We might see something coming up next, either later this week or early next week. But as of right now, what I do know is if you were an option buyer yesterday, when that implied volatility was up here near 180, you got your head handed to you as the option premium got more than cut in half in just a matter of minutes from yesterday's close to today's open. This is the time where if we get a signal, this is the time where we want to start looking at buying call options if we're bullish, buying put options if we're bearish. But I have no signals yet on Roblox, even though we're hearing about it all over the news. All right. Take your eyes off of the big screen. Okay. Take your eyes off of mainstream media and listen to me here. All right. This buying today is not a rules-based trade. Buying Roblox today is a guess. It's a gamble. All right. I want to see what it does tomorrow. I want to see what it does on Friday. And I want to see if it hits any of my rules-based trading, because today it's not happening. All right. Upstart Holdings. All right. Upstart Holdings, UPST. This one really looks like you could take Roblox and flip it and flip the chart. All right. It moved down ahead of earnings, and then it had a better than expected earnings, and it's popped on the news. Not only has it popped on the news, but it has been running up during the day. So it opened down here below 140, and it's now trading at 147. It's actually had about a 10-point run since the open. This could be setting up for a runaway gap. Again, this looks good, but unlike a lot of the analysts that I saw on mainstream media yesterday and this morning, I'm not buying the stock because I don't have a rules-based trade on it yet. Okay. The one thing that I will say is that, again, I have to wonder if you take a look here where the stock was at 110 and then where it opened at around 140. I have to imagine the call option buyer that bought these call options when the options implied volatility was trading up here around 210. Now it's been cut in half. Did they actually make a lot of money? They might have made a little bit of money, but option traders that buy call options right before earnings, and then they see the stock go in their favor, and they wonder, how come I didn't make much on the options, or even sometimes, how did I end up losing money when I was right on the direction? It has everything to do with this red line right here. This red line is how we chart options prices. They were very expensive yesterday before the close for Upstart. Shopify, that's another one that had earnings yesterday. And as you can see, Shopify has been on sale. And it's been on sale since the end of December. At the end of December, it was trading at above $1,400. This thing came all the way down. It was hitting $800. Not once, not twice, but 3 times before its earnings came out, hit $800. All right. So what happened yesterday? Yesterday closed up closer to $900. Earnings came out. They had a better than expected earnings, but wasn't that good. It wasn't good enough for Wall Street. And now the stock is making new lows for the year, trading now down at $732. Call buyers got killed on this, right? But how much did the put traders make? They made a little bit of money, but not as much, because look where they were buying this. A lot of put traders went in and bought this yesterday at the 105 mark in terms of implied volatility. Now we're trading down here near 70. So about 40% off option trading today. Again, this could be a runaway to new lows, but I don't have a signal on Shopify. How about TDD? Trade Desk. So Trade Desk, again, this one here, we've still wait to see earnings, but we've seen highs around 95. We've seen the lows here. I'm sorry, we did have low earnings this morning, but we had the highs at above 95. We had the lows below 60. Came out today. We've dropped down off of yesterday's close, down about 6 points. All right. Had been worse off. Again, it's setting up for a potential trading opportunity, but I don't have one today. All right. So let's take a look at one more. All right. One more on the list of stocks that we're seeing that are making some kind of move after earnings. Randgold Resources, GOLD. Now, my mother-in-law owns GOLD, and every time I talk about gold, she's kind of like a parrot. She goes, GOLD, GOLD, and talked about it yesterday. Well, guess what? She's got a good reason to be happy about owning GOLD. She's owned it for a while now. But take a look at what's happened with Randgold with their earnings. Earnings came out. Earnings are up, and take a look at this. Gold is, now this is running up for two reasons. Number one, they had better expected earnings. Number two, the price of gold is continuing to go higher. Now, it wasn't at the highs that it was 2 days ago, but when you look at this chart, it's looking pretty good. All right. How about some names that we have coming through the close of today and through the rest of the week? All right, let's take a look and see what else we have on the docket for big names. Cisco's one. Cisco's one. You can see that the implied volatility is popping up pretty good for Cisco. We also have NVIDIA, and we're hearing a lot about NVIDIA right now. The one thing that seems to be interesting about a lot of these are we're seeing a little bit of a sell-off ahead of their earnings announcements. DoorDash, which has been a $155 stock just a couple months ago, is now trading down below 100 ahead of its earnings. You also have Fastly, which is reporting here very soon. That it too is sitting in a tight range. We've seen the IV come off a little bit, but not crazy. You'll see it come off crazy, especially by the end of this week. Fisker, also Fisker Automotive, reporting earnings very soon. TripAdvisor as well. TripAdvisor is near the top of its range over the last few months, but still below its 200-day moving average. What else do we have? We got a couple more names on the list that I want to show you. SunPower too, really kind of forming a interesting bottom down here around 15. It's at some resistance for the month right now ahead of its earnings, but I mean a $15 stock. And then we've got Planeteer also trading in that same kind of range that you see where it's got a really nice bottom down here above 12, currently trading just around the 14, just above 14 as we move into its earnings, which are coming out in a day. And of course, I wouldn't, it'd be terrible if I didn't mention Walmart, which has got its earnings coming out as well at the end of this week. And Walmart stores, which was trading in the mid 140s just a little more than a month ago, is now trading down in the low 130s. Walmart WMT earnings will be out on Friday. All right.
Hey, Tom.
So,
you mind if I hop in? I have a question from the chat. It's involving Brutus, and it's from Tony asking, did Brutus signal these because of specific moves, or are they on the watch list because of earnings? So trying to figure out where all these symbols are coming from.
No. So Brutus did not signal these. These are bigger name stocks that all of us hear about, stocks that all of us talk about. But remember, and I said this, I don't have any signals on any of these right now. I could have some signals on a few of these in the days to come. And I mean days, not weeks. All right. If I'm going to get any signals on these dozen or so stocks we talked about, then I'm going to be getting them possibly by the end of this week. And those of you that are Operation Surge Strike members, you'll be getting them too. If I get them, you're going to get them. Once we vet these and look at these. Now, you did mention Brutus, so let me show you one of the Brutus scans, or one of the scans I do have happening. We're going to talk about this today. Moderna, Hewlett-Packard, Autodesk, CBRE, Lowe's Companies, Nike, Viacom, Ultra Salon, Salesforce, Etsy, American Electric Power, and Gap. What do these stocks all have in common? Let me slide on over. They got they're at least 75% accurate going through the last 4 earnings cycles. I've got days to be possibly looking at buying them. More importantly, over here on the far right-hand side of the page, this is where I go hunting. I hunt for average return on investment and what we like to call ROI percentages. And those bigger numbers up here, these double-digit numbers are good. So I got at least 5 or 6 of them I'm going to cull through. And guess what? I plan on giving out one of these today. By the time we get to the bottom of the hour before we leave, my trade today is going to be pulled from one of those 5. All right, Eric?
That's something to look forward to, Tom. But why don't we get into ways that you're going to be trading some of your upcoming earnings, which is going to take us into the strategy session. You ready for that one?
Yeah. So, there's a number of different ways we can look at earnings, guys. When we talk about earnings, we talk about different ways of trading earnings. I talk about the tide rolling in and the tide rolling out. Okay, so the tide rolling in, I'm trying to get ahead of potential big news. And I want to get in and I want to get out and I want to scalp in and I want to scalp out. But for today's session, I want to talk a little bit about another way that we can do that. All right, couple ways we can take care of earnings. Number one, is there a way to trade earnings regardless of market direction? And the answer is yes. All right. This is something called a straddle. So I want to show everyone how we can build a straddle. And I'm going to build a straddle right now on a stock. I don't want you to do it. This is an example. Example for those of you who've never done a straddle before. I'm going to show you how to do one right now. So I'm going to take a chart and we're going to let's look at Walmart. That's a good idea. Okay. Even though I don't want to trade a straddle on it because it's going to be expensive. That IV up here is expensive. But I want to show you how to build a straddle. What is a straddle? A straddle is a combination trade. It's an at-the-money call and an at-the-money put using the same strike price and the same expiration date. Now, I'm going to build one right now using Walmart. So let's look at some option chains. Now, if I were to build an at-the-money call or an at-the-money put with Walmart using this Friday's options, it's going to be relatively cheap when you look at the price. But it's not going to be cheap in terms of implied volatility or option premium. So if we look at, and right now I have the last price of Walmart at $133.39. The 133 calls and puts, these are going to be the closest to the market right now. That's why we call them at the money. At the money means the closest to the strike price. So here's my at the money call and here's my at the money put for February 18th. If I put those together and I buy the call and I buy the put, how much is that going to cost me? Let's find out. So if I were to do that, and this is only a 2-day trade, which is one big reason I don't want you to do this. And again, it's just an example of how to build one of these. I'm going to give you a straddle on a better name with a setup. All right. That's going to happen soon. But right now, let's take a look at this 2-day trade, $572 for 2 days, between now and expiration. What are we doing? Well, this straddle involves the Feb 18 133 call, which is trading around 305, and the Feb 18 133 put, which is mid-priced at 267. You put those two together, and you're talking about a trade that's going to cost around $572. It's $5.72 for the trade, but then you take that number and you multiply times 100 because the contract is good for 100 shares of stock long and 100 shares of stock short. The long is the call side, right? The short is the put side. You add those together, and what you have is a trade that if you were to graph it, it looks like this. So what this means is if Walmart were to go up, the calls would outpace the puts, and you could stand to make money. And if the stock price were to go down before Friday, the puts might outrun the call options. Because again, what do we know about buying calls and buying puts? We know that if I buy a call, the worst case scenario is I lose the premium. If I buy a put, the worst case scenario is I lose the premium. But if I buy a straddle, the worst case scenario is I could lose premium on both sides. The worst place that Walmart could be on Friday at expiration is $133 because at $133, your call is worthless and your put is worthless. But at $138, okay, or let's make it $140. At $140, where are we? Well, the 133 call is going to be worth 7. The 133 put's going to be worth 0. So if you paid $5.72, all right, or $572 for something that could be worth 7, that means your $572 investment could be worth $700. But in order for that to happen, Walmart has to get to 40. All right. On the downside, Walmart would have to get to $126. At $126 to the downside, the puts would be worth 7 because, again, you have the right to sell at $133. That gives you a $7 intrinsic value on those puts. The calls would be worth 0. So do you see why I show this as a non-directional trade? What has to happen is Walmart has to get up and go somewhere before Friday at 4 p.m. Now, you only have 2 days for that to happen, being today is Wednesday. So this is not a high probability trade. In fact, you want to know how low probability this trade is? Well, I have that data too. You see that? The computer is saying 0% chance you're going to make money on this trade. Now, it isn't 0%. There's a fraction in there, but it's less than a 1% chance that this trade has any ability to make money, right?
I don't like those odds, Tom.
Yeah, I mean, and the reason it's so low is because the price of Walmart is so high. Now, you might say, some of you might go out there and say, well, Tom, why don't we sell that straddle? Because there's always that fractional, that 0.001% chance that Walmart could jump up or Walmart could get caved down. And then all of a sudden, that straddle goes in the money. And you don't want to be on the sell side either. Again, I said that this was an example of how to put a straddle on. But it's definitely not an example of a straddle that I would want to buy. So what have we learned here? Straddles are non-directional trades, okay? You place them as one-ticket orders. Now, if I want to place it as a one-ticket order, how does that work, all right? Because I'm showing it to you on my software. My software is not, this isn't a brokerage firm. My software doesn't execute trades. It analyzes. It's analytic software. So for me to want to go in, if I want to actually go in and place that order, Eric, I'm sliding this in from another screen, right? This is my Street Smart Central platform. This is Charles Schwab. But if I were to type in WMT, all right, and let's say I wanted to actually place this trade. It is a one-ticket trade. You don't need to place 2 trades because I'm going to come down here. I'm going to find the word straddle, and I'll put that in. And see, it's already setting up the 133 call and the 133 put that expire on Friday. Now, if I wanted to change those dates, I could go in and change those dates. So strikes, I could change everything I want. But right now, I can see this is going to cost $5.78 right down the middle. And if I wanted to pay that $5.78 or $5.77, I would simply put that in as a limit order. And I could put that in as a day-only order. So that's how you place this. You take it from the trade, as I analyze the trade, to actually executing the trade. And if I get executed, then I've got to go out here and see, well, where do I think Walmart's going to go before that expiration? Again, there are a lot of don't knows about this stock. Brutus has not analyzed this at all. In fact, it spit it back out and said, nothing to see here. And so I'll take trades where I've had Brutus go in and analyze the trades, and I've had Brutus tell me what the average profitability is on that trade. And then I automatically know when I get in what I'm looking for to get out as a profit. So if Brutus says, hey, I've got a straddle that has a 25% profit potential, and you can do it right now for $4. All right. So I go in and I buy it for 4. What's 25% of 4? 1. What's 4 plus 1? 5. I would immediately place my order to sell the straddle if we got to 5. So there's your 25% return. Okay. So that's all about, managing, executing the trade, etc. So there we go, Eric. So that's a piece on how to get into a straddle. That's one scenario that we talked about. Okay. And what's the whole purpose of buying these straddles ahead of earnings? It is to sell these straddles ahead of earnings before the earnings come out. Because I'm going to tell you, every once in a while, if you buy a call or you buy a put or you buy a straddle on before earnings and you hold it through earnings, every once in a while, you're going to be right. Most of the time, you're going to be wrong, and the probabilities confirm this. So that's the first thing I want to talk about. The second way that we can trade these particular earning strategies is by selling premium, all right, by selling option premium. Now, I know you guys, a lot of you just came out of Mark and Garrett's Emergency Energy Summit, all right? I've been selling option premium and doing it very, very well for years. And more recently, I've been selling option premium on an energy stock. The energy stock is CPE. It's got earnings coming up on February 24th. Now, I just closed out one of several winning trades in Rocket Wealth, and the one that I closed out last week was on CPE. So, Eric, you've got
Yeah.
a little image on what we did with our Rocket Wealth folks, right?
Yeah, I got it right up here right now. You're sitting on two different open positions for CPE in your Rocket Wealth Initiative portfolio. Your plan is to close one of those trades now, and in doing so, you'll secure a small profit as well as free up some buying power. And your
Yep.
actions to take are buy to close the CPE on April 14th, 2022, $33 puts for a debit of $1.15 or less. Exiting at this price will result in a small profit of 70 cents.
Yeah, and you know what? That's the smallest profit we're taking this week because we have a couple 100%ers that will be ringing the cash register on this Friday. And those of you that are part of Rocket Wealth, we're going to talk about those in specifics at 1 o'clock. So at 1 o'clock today, Jeff Beamer is going to be with us, and he's going to go through not only the whole strategy, that particular strategy, which I'm going to leave that for him to discuss at 1 o'clock on how we do this on the other side of earnings. But more importantly, how we put those trades on and the reason why we want to just leave them on all the way to expiration. So, that's the case. Those are two different ways that we can go in and trade during the thick of earnings season. So, Eric, hey, how about we plop on over and take a look at some questions and more importantly, some charts.
Yeah, I like the idea of that. So we're going to flick on over here to our question and answer. This is your time, chat, to get your questions in. So let's see here. Let's see what I could pull up from the chat here, Tom. Give me one moment. All right, we got this one coming in from Steve J. Tom, VIAC dropped dramatically today. Is it a buy? Let's take a look at that.
It did. You know what? The interesting thing, when I open up my software, any trades that I've saved or any scenarios I've put together, I've looked at, will pop up. And that was the one that popped up immediately upon logging in this morning. I was looking at that. So I'm going to bring up the chart on Viacom. Fundamentally, it's a very interesting looking stock. So VIAC, I'm going to put that up on the screen right now. They missed. They had a miss, and they beat their revenue, but they sorely missed on earnings. I think they were off like 40%. So I look at this and I think, is this a fundamental buy? And right now, when you look at what's going on, in this particular, not only in the chart, but really today, see, this thing opened at 30, and it's already trading down even lower on that news. Here's, one of the biggest problems Viacom's got going with it right now is there are too many choices for you and me, Eric. All right, more and more. And let me tell you, I'm one of those people. It's not me. It's my family. Everybody wants everything. We got subscriptions to. I don't think there's a subscription out there I don't have a premium service on. There's just so many choices in my house when it's time to turn on the flat screen. And but I did hear my wife talking and my son last night. We were talking about Viacom, and we were talking about the choices, and then she said, "Oh yeah, that reminds me. I get Showtime as part of the Paramount Plus premium thing, and I'm also getting Showtime on cable. So I'm going to get rid of the Showtime on cable because I got it as a bundle on Paramount." And then she finally realized, she says, maybe I need to look at all these subscriptions to see where we're getting we're getting layers, we're getting double of something. I think a lot of people are doing that. And a lot of people are looking at cable TV and they're saying, I can get a lot of what I get on cable TV that I'm paying $200 a month for. I can swap that out and go with a Paramount, which gives me CBS and local channels. Or I can go with YouTube television, and I can actually start to get, that was the big thing that was separating cable from streaming was live TV. And now you're starting to see live TV being thrown into some of these packages. I think that could be very, very bad for companies like Viacom. But you can see here, when you miss your revenue by 40% on something that's a brick and mortar, which anybody should be able to forecast, that's a big surprise. What do I see here with Viacom? Again, come on down and take a look at, and we haven't even seen it yet, the volume. Tomorrow, I want to look at the volume of the stock, right? I can see the volatility is dropping, right? I can see the IV is falling off, but I want to see how many people are bailing out of this stock. And I want to see if not only a buying opportunity, but a further shorting opportunity. So right now, Eric, the consensus for me is I don't know. And the consensus for all my tools is nothing to see here yet. While I'm talking about it, those of you that are on our YouTube channel, we're taking charts by request. So give me your favorite stock symbol, and we'll plug it in and see what it looks like. Eric, what else
yes,
you got?
We will. I have another one for you, though, Thomas, from Chimera. DIS. Thoughts on DIS?
Disney. Disney came up. That was also one that came up on my on something I was looking at, and so what ended up happening was it had a jump in earnings. All right, we did have the gap. I'm going to bring this in so everybody can see it. Jump in earnings. We had a 2-day pullback. Now we're running back up. I'm telling you right now, we get above the high of today. If we close above the high today, where's the high today right now? High today is 155.92. A close at or above 156, and this is triggering as a potential buying opportunity. And I would even look as far as that 200-day moving average as your potential target. So up here in the upper 160s. So a close above 156, you could see another 10-point run on DIS. What else you got, Eric?
Thank you, Tom. Thank you very much. We have a bunch of questions coming in, which is great. I love it. We have Dano, iron condors on earnings using strikes beyond the expected move. Do you do those?
Absolutely, I do them. I actually have this is something that we do once a year. I teach this kind of stuff. This is an advanced trade, and I call it my 24-hour earnings approach. And it's a way of getting into a stock literally at the moment before earnings are released, and then I'm buying back out the very next day. It's a way of getting in and out 24 hours before. So, pick an earnings stock, and right before the close, before those earnings are announced, I will put together an iron condor. That is a combination trade also. What we're doing is we're selling a strangle. That's an out-of-the-money call and an out-of-the-money put. And then we're buying further out of the money calls and puts for protection. And that sets up to be what's called an iron condor. Now, the reason I go out of the money is I'm trying to get away from the potential blip that happens after earnings. If I can keep the stock inside the condor, you see a crash the very next day. You see these crashes that happen. See what happened with Disney? That crash down. All right. If you had your iron condor outside of what happened the day after Disney's earnings came out, then you profited from it. But if the stock move jumps away very, very quickly, you could suffer a loss. But again, it's a fixed loss. So the answer is yes, I do them. But here's the kicker. Again, I've got strategies and I've got software that creates scans for which ones offer the most lucrative profit potential with the least amount of risk and the highest probability. All right. I'm looking on my YouTube channel, and I see the Nature asking about Facebook and Microsoft. So let's double down and look at both of those. First symbol is FB. I'm going to say this right off the bat. My family picked up Facebook. Even as early as yesterday, so the family owns it below 220. And then when I by the family, I mean my wife and my son. Our family office is yet to jump on this, but I am potentially looking at buying some around, if we can get down around the 200 area myself, because as much as everybody hates this company, it makes money. And I believe it makes money because it's targeting the people who spend money. And that's the baby boomers. Those are the ones with the money. And those are the ones that are on Facebook, looking at their grandkids, chatting with each other. I know it's not cool, for anyone who is, well, if you're a baby boomer, Gen X, or millennial, you're on Facebook. If you're anybody else, you're TikToking, you're on Instagram, you're in areas where the other generations simply are not. And I know there's going to be a few. You're going to say, yeah, but I'm on TikTok, Tom. I'm a baby boomer. I'm on TikTok. Hey, God bless you. I just choose not to look at that. I've seen my wife and my sister-in-law, and they get on TikTok, and I'm telling you, it's just like this. It's just going like this, and they're going like this, and it's like all of a sudden they're in a trance.
That shows that it's a successful platform, because I've been on it as well, and you find yourself there for hours just scrolling. They've gotten an algorithm that sucks people in, and you can't get off of it, which is why it's seeing so much success. It's crazy.
Yeah. They start making some money, then I might start seeing some signals on it. But yeah, Facebook, I think, is an interesting long term. Years before this one can see new all-time highs. Will it be the metaverse? I don't know. I think that the last thing in the world these guys want to do is move too far away from their core. All right. So that's Facebook. How about Microsoft? MSFT. And let's take a look at that. And so look at Microsoft, same kind of situation. And the one thing that Facebook is becoming is, I think Facebook is going to become a Microsoft, an old, boring company. Let me tell you something about old and boring. They work over time, but they're going to be more longer-term trades. And hey, big shout out to Miguel. He's one of my guys, hangs out with me on YouTube all the time. I see him out there. Thank you, Miguel. Thank you for being a subscriber. Eric, what else you got for us?
Oh, yeah, Tom. We got another one, and I'm just going to bring you over here. I'm going to pop this one in. It's from Winner, I think. What's the best oil and gas play right now?
Oh, man. For me, right off the bat, I'm going to look at a couple of them. So let's throw a couple of them up. The very first one that I want to talk about is USO. This is a way of diversifying straight into oil with a little bit of gas in it. Okay, it's a lot of oil if you take a look at this, and a little bit of gas. USO, and this is a runaway play. All right, so we see USO right now trading around the $65.80 area. All right, so where is oil itself? It's approaching $100 a barrel, right? There is consensus that we could see $125 a barrel oil. I believe that is indeed something that's going to happen. To get to 125 oil, we would be at or above. We'd actually be above 75 on USO. So USO has a potential 9 to 10 point move if that happens. And I believe that very well could happen by the summertime of this year. Now, you might say, that's a long time to wait. But you're talking about something that's already up huge and has been, even going back into the end of December. So just the last 6 weeks, we've had a huge move. We could see piling into oil. And forget about geopolitical events for a moment. Forget about the fundamentals, and even in demand as we go into summer. But look at the seasonals. The seasonals show us that, I believe it's 13 of the last 15 years, we've seen a run on oil and energy stocks between mid-February to mid-July. And it looks like it's setting up to be another one of those years. So USO's one. The other one I like is OIH. And I haven't even looked at the individual stocks. I believe that Garrett and Mark talked a little bit about those. But OIH, again, is the Oil Services ETF. And this is a way of tapping into not so much the oil industry in terms of oil itself, the commodity, but all those companies that service oil, and then a few that service natural gas and distillates. And so you see this one making brand new highs at 250. Now, again, if you see USO or oil going to 125 a barrel, and you see USO that could potentially reach 75, those are roughly about 20 to 25% from where they are right now. What's 25% of 250? Right? You got to tack on another 67.5 points. Let's just call it 60. We're talking about something that could be above 300 here on USO again by when? by summertime. So there's my answer for you, Eric.
Oh, thank you. Well, how about, are things quiet over there on YouTube, or should I grab another one for you
They
from here?
are.
Okay.
They are. My YouTubers are. They're like that.
They're sleeping. Maybe they're in awe of everything they're learning right now. How about this one right here from Femi from Houston? Tom, where's the glossary we can learn or read more on how to use Brutus for trades? So a lot of people have been interested in Brutus lately.
Right. So first, that's information available for our Operation Surge Strike members. Okay, that's the first thing I want to say. The second thing I'm going to tell you is that we have very, very recently, we've done a couple of things, and we're going to make some announcements about it. I've got an easier way to get to Brutus in our tools. So those of you that are lifetime members, you're going to be able to access Brutus with a few less mouse clicks. That's coming very, very soon. And also what's coming very soon is we are about to make available this little scan right here. All right. It basically is Brutus. And it's Brutus is tapping into something that we call the optimal trader or optimal call put. It basically serves up for you exactly what we're looking at on a day-to-day basis in terms of earnings, potentially coming into those earnings plays that we want to get into and get out of ahead of that time. Those are available to our lifetime subscribers. So if you are part of Operation Surge Strike, and if you're part of our lifetime subscription, you have access to Brutus. There is help files within our software, but I'm going to be putting out even some more videos than what we already have. So take a look at the welcome videos that we have for our Operation Surge Strike members, and I've got some information in there on exactly how Brutus works. Eric?
Yep, we have another question here. This one's a little bit about news. Tom, which ETFs benefit from Ukraine and the Russia events going on?
Well, right now it's going to be the two we just discussed: USO, OIH, and GLD. GLD is the big surprise, and I think that's one of the biggest shockers here. And again, full disclaimer: I own a good bit of GLD. And you can see here, GLD is just, it's back up at the top of its range today. We need to get above the high that happened 2 days ago at 175. We get above this high, and I think the breakout's just beginning. All right. And Eric, you know what? I want to make sure that I talk about our trade, our trade of the day.
Yes, let's do that.
Run out of time.
That's an important one.
We're getting at that time where I don't want to rush this. So I want to talk about our trade today, and it does come back to looking at part of the Brutus piece we look at. So I scan through and I look at what we call expensive options, and you can see stuff like Heinz up here. There's TDD, Trade Desk, Roku's up here, American Waterworks. These are all companies that have very extremely high options premium right now. And then I go down and I look at some of the ones that have extremely low option premium. But more importantly, what I'm doing is I'm looking at what I like to call ahead of the time, all right, ahead of time. And I pull some of this out where I'm looking at searching, and I'm running a search going forward the next 30 days on earnings. And I run through something I like to call a first pass and optimal, where we're looking at 75 to 100% success looking at past earnings reports. Now, I told you that I was going to go through and I was going to look at a group of stocks where we had those potential double-digit returns moving forward. I looked at some of them. Some of them were extremely expensive. And then I looked at one and I thought, here's one that looks interesting, that might be something for everybody's pocketbook. And so here's what we're going to look at. Again, idea. It's a trade idea, not a recommendation. But let's take a look at HPQ. So this is Hewlett-Packard. So Hewlett-Packard right now has got earnings in 12 days. So it's setting up for something that we can look at that can happen more than a week in advance. All right. If you look at 228, so where does 228 sit on the calendar? All right. 228 sits on the calendar on a Monday. Now, I would want to be out of this particular trade probably by next Friday. Monday at the latest, but but it's based on whether they report before market open or after market close. If they report before the market opens, I want to be out on the 25th. If they report after market close, I want to be out on the 28th. Now, out of what? Okay. What we've done is we've gone back and we've looked at hundreds of days of data on Hewlett Packard. I'm going to bring up the last couple hundred days so you can see it. And you can see sometimes where we see the Hewlett Packard go up before earnings, and you can see sometimes where we see Hewlett Packard going down into earnings, right? So it's not a buy the call play or buy the if it's bullish or buy the put play if it's bearish. It's buy the straddle, which is the at the money call and the at the money put, right? So here's what I got for you as an idea. What we're looking at is we are looking at the March 4th 37 straddle. That's buying the 37 call, buying the 37 put, putting that together. Right now, that's pricing in at around $306 or $3.06. Okay. What am I looking for as a return? All right. What would I look to take out of this? Now, remember, we're buying both sides. We're buying the call and we're buying the put. So you can't expect a double when one side might make money and the other side could go down and lose money. What we're trying to do is profit from the difference between the two. And if I buy this for $300, let's say, I'd be out of it if it goes a point higher. If the straddle's worth 4, if I paid 3 for it and the straddle's worth 4, I'm out. So I'm looking for a 25% move, a 25% profitable move in HPQ. Now, if you want recommendations on calls, on puts, on straddles, both coming into earnings and going out of earnings, then I suggest you tune in with us at 1 p.m. on Tuesdays as an Operation Surge Strike member. Okay, if you're not a member, we've got information on the screen. We've got links that you can get into. And if you want to be a lifetime member, then you can get the Brutus software, the exact same software that I use every single day when I'm analyzing and putting together these trades. All right. Thank you all for a great day. 1 o'clock. Jeff's going to be here at 1 o'clock to talk about all things Rocket Wealth. So we'll see all of you then. Otherwise, have a great week. I'm off next week. I'm doing some live training with some of our top members live in Florida next week. So I'll see you in about a week's time. Thanks, everybody. See you soon. Bye now.